All right, welcome back inside our proactive newsroom. And joining me now is Steve Schoffstall. He is the ETF product management with Sprott. And great to see you again, Steve. How are you?
Doing well. It's great to be back, Steve.
Yeah, excited. Lots of stuff to talk about today. First off, let's talk about Trump because everyone else in the world seems to be talking about him as well. And just really his impact on nuclear energy. I know he's talked in the past about the importance of nuclear and where that's headed. So just some general comments on that.
Yeah, he's definitely the hot topic of the day. Seems like every day, actually. When you look at his stance on nuclear energy, it's something that we're viewing very positive for the sector. He's come out with a lot of policy positions and statements where he's emphasizing energy independence for the United States, where he's emphasizing securing the grid and making that more robust, and then also the rapid expansion of nuclear energy as part of that. I think probably one of the things that he's done that's probably end up being most consequential to the next 4 years as it relates to nuclear energy was his Secretary of Energy that he appointed, Chris Wright, who recently took over. He's a former board member of a nuclear company that was building small modular reactors and working toward that technology. Both he and President Trump appear to be aligned and very much in lockstep as it relates to nuclear energy. They both want to see, according to the Secretary's statements, a nuclear renaissance over the next several years, and something they're very eager to get kicked off. And in support of that, early on in the first couple of days of Secretary Wright taking over, he actually issued a secretarial order that was very positive for nuclear energy. One of the things that we saw in there was to prioritize research on advanced nuclear reactors, among other energy technologies, but specifically calling that out. Also calling in that order for unleashing the nuclear capability of the United States. And then a big one, which has really held back the nuclear industry for a number of years, is streamlining the permitting process. So getting those new nuclear power plants up and running much more quickly. So it's, from our view, it's clear that the Trump administration, the Department of Energy, are very much looking to advance the nuclear narrative and advance our nuclear capabilities as it relates to producing more energy from that clean energy and reliable energy source.
And we're still seeing support in the markets for nuclear as well. You're still seeing some of that?
We are flows into uranium and nuclear ETFs have been very strong, and that's a spot that we're still seeing a lot of investor interest. We do see some volatility as of late when we start to look at tariffs and how that might play out in the market and what that means from an investor standpoint. But investor interest continues to remain high in that sector.
Yeah, let's talk about tariffs because it's been a hot topic here. Obviously, I'm in Canada, so it's been a very hot topic here. Also in the U.S. as well, and countervailing duties and all that. What impact do you think tariffs will have?
Yeah, so tariffs and just the whole geopolitical picture in general are really throwing some volatility and uncertainty into the market. And with that, investors should be prepared not only as it relates to nuclear energy and uranium, but other aspects of the market, be prepared for some volatility as the market tries to figure out exactly what's going on. But specifically as it relates to nuclear energy, there's a couple of things that really stick out. So first, if you recall late last year, United States announced that it was going to have a ban on enriched uranium coming from Russia by 2027. Some exceptions potentially between now and then, but that was the goal. Russia responded with a retaliatory ban, basically cutting off supply earlier. Over the last few days, as President Trump and Vladimir Putin have started to engage in dialogue over Ukraine, it'll be interesting to see if the nuclear equation plays out into that as well, if there's a cooling of tensions and perhaps a rollback of some of these actions. So that's something that we're keeping an eye on. Another thing on the tariff front specifically, and as it relates to Canada, when the tariffs looked like they were going to happen earlier this month, included in that, which I don't think a lot of people realize, was a 10% tariff on uranium. That's significant because Canada sends a lot of uranium to the United States. The United States gets about 27% of its uranium from Canada, so very significant. And then also, as it relates to the tariffs on China, which actually did go into effect, we actually saw the rate go up for enriched uranium coming from China from about 7.5% up to 17.5%. So what this is really doing is bringing in some of that uncertainty into the market. We see utilities are look to be a little bit paralyzed as it relates to how to procure fuel and when to do it and at what price. So they're at this point they look to be standing down and waiting for things to shake out.
Yeah, I'm interested to know your thoughts on the uranium miner themselves, because obviously, as you mentioned, Canada is a very strong as far as uranium mining is concerned. We have in essence, a whole industry of that. So how do you think that's going to impact those miners? Because obviously, offtake agreements into the U.S. is a real supportive of raising money in order to keep that mining going.
Yeah, the important thing to notice, like when we see all this underlying volatility, is that the big picture is still very much intact, and even over the last 6 to 12 months has actually strengthened. So
Mm.
from our perspective, the uranium miners are a place that we view very favorably. I think there's a lot of opportunity. Prices have come down somewhat in the last 12 months, and some investors may find that as an attractive entry point. We've had a lot of discussions with investors into the interested in the uranium mining theme. Our investor base tends to be longer term shareholders. They tend to understand the story, and for that reason have pretty much remained the course, and in some cases allocated additional capital to the trade. But when you look at the mining sector in and of itself, it still is being driven by future electricity demand, right? So when we look at electricity expected to increase about 170% out through 2050, that power needs to come from somewhere. Countries are increasingly turning to nuclear energy because of the reliable baseload power, because it is clean and it fits those clean energy motives. So we're seeing that as the main driver of demand going forward. Looking out through 2040, estimates still show that at least a 700 million pound cumulative deficit of uranium over the next decade and a half. So those are structural supply and demand issues that we don't see changing anytime soon. And barring some massive amount of new material hitting the market, looks to be very positive for uranium miners for the foreseeable future.
All right, well, we'll see where it all goes. It's changing by the hour, sometimes the minute. Steve, thanks so much. Great to catch up with you again, and I appreciate your insight.
Absolutely. Thanks a lot.
All right, there's Steve Schoffstall. He is the director of ETF product management for Sprott.